Good morning, everyone, and welcome to this quick Go No Go charts breakdown. We're going to talk today about rotation. As investors, we talk about rotation a lot. We've seen over the past several months rotation from mega cap to small cap. We've talked about the rotation in trend between domestic US markets and emerging markets. We've talked about financials and technology as a leading sector, and now we're seeing rotation into some of the more industrial sectors that are well positioned for a potential economic rebound this year. But one of the themes that we've been discussing this week has been the rotation from growth stocks into value. So that's the first chart that we're going to look at today. This chart is a go no go chart on a weekly time frame, a slightly larger time frame than usual, and it's looking at the ratio between the SPYV, which is the value ETF for the S&P, to the growth ETF for the S&P, the SPYG. And now looking at relative strength like this can really help us assess a change in trend and which security is outperforming or underperforming. And as you can see, the overwhelming no-go trend that's been in place for a significant amount of time shows that the value ETF has been underperforming. Growth has been a leader. Growth stocks has been where a lot of the outperformance has been. But we can see that this is changing towards the right side of the chart. We can see that, I think 3 weeks ago, 3 bars ago, we got a go trend identified on this relative ratio. So the trend has changed, meaning that the trend now, the go trend now, is moving in the direction of the value stocks. And we can see that supported on the panel below, where the go-no-go oscillator broke above the zero line as a little bit of a leading indicator, and now is above the zero line and finding support there. So the first chart here is just showing that there has been a significant change in the technical environment between value and growth. So if we look at the second chart now, this is a chart of the QQQ, the daily chart. Now this is a fund that tracks innovative technology stocks. So if we think that the trend is moving away from these growth stocks and from tech stocks, and the play has become more of a value one, then we'd expect some bearish imagery or some no-go information to be showing through on this chart. And what we can see here is a fairly textbook head and shoulders pattern that formed on the QQQ. As price ran up to a new high, we also saw some bearish divergence on the oscillator below. You can see that as high made its highest high, the go-no-go oscillator made a lower high. To compound that, then on the right shoulder of the head and shoulders, we saw the go-no-go trend indicator struggle to maintain the colors of the go trend. And we saw a few amber bars, and then finally rolling into that no-go pink bar and being identified as a no-go as it broke the neckline of the head and shoulders. And of course, with that, the go-no-go oscillator giving bearish readings as well. So the last couple of days have been important to watch, and we've highlighted this in our daily notes, that the sharp rally 2 days ago brought the price of the QQQ right back up to that neckline, which is fairly typical in this pattern, which we saw a retest of that neckline. And even yesterday, it opened higher above that neckline. And if it had closed and stayed above that, that would have obviously changed the narrative and caused concern for people following this pattern. But it fell yesterday during the day and closed back below the neckline. So the no-go trend is still in place on the QQQ, and the oscillator is still confirming that with where it is in the panel below. So it's still in a place where we expect the QQQ to perhaps struggle in the next few weeks.